Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Today's agenda, we'll go through our regular market update. Not much with earnings going on, but next week um, we will push out the Q4 earnings plan. So we have that look forward to, and Fed meetings also next Wednesday. And then, so after just a quick earnings look, we'll go into Joe's analysis. He's back from his vacation. So let's get started. All right. So indices all still in one, been in there a long time. SPX, NDX, Russell, even Dow. As far as sector wise, we had a couple flip in the past week. XLE 1 to 2. So it's energy, utilities, and materials all flipped into two. Healthcare's kind of been hanging in for quite a while. But other than that, everything else in ones, and some of these have monster moves. I mean, you look at this consumer discretionary, the state one's up 24%, crazy. Financials up 15. That thing doesn't move much. That's kind of a slow mover typically, but some of these have made really big moves. So, and obviously indices have been strong. Pie wise, pretty much flat over the week. We moved down a little with indices, but pretty much flat. Pie wise, down a little on state ones, still overbought above that 45% rate. And so let's do a deeper dive here on market pulse. So, last week we're about 50, so just slightly dropped into 49 here. If you look at the twos, we're about six something. Now we're right about 2% up on those. Nothing drastic happening right now. Sevens, pretty much nothing. You look at eights, pretty much nothing. Really, just not much going on. Fours, even that, that dropped a little over, but I think a lot of those went into two. So, but just not a big, not a lot of big movements, since last week. If you look at, the new highs, new lows. We had a big pop up there on the 25th, end of November, and since then, just kind of quieted down. Lows, same thing, just still flatline, nothing big, and but the highs have come down. So as of yesterday, very low one. So could we see another one of these kind of little crossovers that we've been seeing like here, and little pop-ups
I'm
here?
trying to call the VIX.
What's that? Sorry, I mean, so, could we see another crossover? Possibly, especially when those highs really, crater. That's kind of when we see these lows pop up, but, nothing guaranteed. Obviously, I think we're in that very bullish time period, running into the end of the year in December, seasonality. We've shown that a bunch for the indices are usually strong, but just keep an eye on it. So I wouldn't, we've had a little pullback here, from the all-time highs, and we'll look at that deeper on the charts. But the 20 days did, cross here. So, um, that's kind of, not a big deal, but 50s obviously are more important. Obviously, 200s are real big, but 200s, 50s haven't moved much. You can just look at the 200. It's just bullish period. The last cross here, like August. Since then, just been, grinding higher with, minor pullbacks, but 200 just gives us, kind of like a lot of the all clear type stuff. It's not even been moving much lower, but, first thing I would watch is, 50s, very big, even back here, it kind of got close to and nothing crossed. But when beginning of November, we did cross here shortly, and then turned around. So, but very different picture. Same thing with kind of like the modeling. You know, when we're in a bullish state, we get these bearish crosses, and then they don't last that long. Then we go bullish back again. When you look at the other way, when we're in kind of a bearish market, it's kind of like the other way. We get the little bullish crosses and bearish move after. So still looking, bullish overall, I would say, with pullbacks coming, somewhat infrequently, but definitely coming every time to time. So bullish, bearish overall. Just not much movement. We had the high here, 65 something. So just not a big move since then over the last week. But we'll keep an eye on it. And like I said, a lot of these other indicators, we get the bearish cross, and that's kind of like the bottom, in this kind of market. Whereas, the previous one, it was like the bullish crosses, and the bullish tops were the top of those bearish times. So still looking overall bullish.
Hey, Josh.
Yep. Hey, Lee.
Yeah, hi. You speak of, pullbacks. I've been expecting one for a long time, but haven't gotten what I thought it was going to be. Are there any threats out there that you see that you're concerned about that could cause a 5, 8%, 15% pullback? And you, Joe, or anybody, I'm just wondering,
Yeah.
what are the threats? Because,
Yeah.
okay,
Yeah. Yeah. So like, my kind of two ongoing, I think always almost for the market is like a liquidity crisis. Like we saw back with the Silicon Valley Bank, that type of thing, like a banking liquidity crisis.
yeah,
And then number two for me right now, ongoing always is geopolitical type stuff, something crazy going on in the world,
yeah.
um, like wars, all that type of stuff. But outside of that, I mean, earnings look good, like Joe's been highlighting, and as long as those are kind of, meeting, kind of what the expectations are, or it's like seating and stuff like that. It's not nothing big. I think a lot of this talk on tariffs and stuff, or yeah,
You know,
that whole thing is what, end of January. So I mean, we got a month and a half basically until any of that stuff really, and could start, factoring in. But those two are always my big things, and I don't see a lot else outside of that. And those are more like almost like black swanish type things, like geopolitical stuff and liquidity that just creeps up on you. I know there's a lot of problems in like commercial real estate type stuff, but that stuff can go on for years. Like we saw in
I think it's been going on for a year or two, hasn't it?
years. Yeah, oh, yeah, definitely
And
years.
as I listened to the news, I thought there was an imminent trouble, big trouble, but it's not even mentioned anymore.
Yeah. Well, I was talking with Joe. I mean, like the whole Syria thing. I mean, like, I saw nothing before that. Basically a government toppled. Like there was nothing really I saw, and I read a lot of like alternative media, and like there was nothing, and this all of a sudden the dude, Assad's gone, and
Right.
Syria's, I was just like there was no forewarning, and markets didn't even react to it. So, um, yeah, I mean we've been tracking the real estate stuff for a long time, and that takes a long time to work through, and if there's, I mean. I mean, going all the way back to that like evergreen in China, that big,
Right.
yeah, it takes the real estate takes a really long time. And there's movies about like The Big Short and like the guy's like, years in front of, he saw the crisis, but he's,
Yep. Yep.
yeah, so you don't know when it's going to actually trip, but
All
that's,
right.
those are my two big things, and they're always my two big things, but I don't see anything else right now, you know, um, besides those two, like always ongoing things. I don't know. Joe, did you have a different opinion? Anything else?
No, I really don't, Josh. I mean, I'm with you 100%. The whole geopolitical is the thing, as you said, you and I talked about Syria. And, when you read a few of the articles, it sounds like, that didn't happen overnight. It sounds like there were at least 11, 12 days of uprising there. You didn't hear boo about it in the news over here. And then 50 years of ruling, is overturned and no reaction whatsoever in the markets. So, no, really no different opinion, Josh. Interestingly, though, with regards to the liquidity issue, I want to focus today, focusing on XLF, which I think will dovetail a little bit into the whole liquidity issue. So, nothing, and to both you guys' point, the whole idea of commercial real estate, is the imminent collapse, and guess not. So,
Yeah.
no,
Not so far.
yeah. No. So, I just think, AI is trumping everything, just, and that little bit of comparison to, the late 90s, which turned out to be a bubble, certainly. And,
Yeah.
Things just look healthy.
Yeah. Well, I mean, even you think about the previous real estate crisis, right? Like, that was ongoing and ongoing until basically someone said, we got to get out of this and started dumping all of the securities. And that really triggered a lot of everything. That was kind of like the start of it. So,
Yep.
people could be just holding these until someone says, yep, the risk is, there's too much risk here. Let's just dump it. And, I don't know. So, could be similar to that type of playbook, but I don't know. I'm not on the inside of any of that, but I know there is a problem, but when it really comes out, I don't know. So,
Yeah.
Say,
anyone else?
I
Yep.
wanted to
Yeah.
hear what you think. So thank you.
Yeah, sure. Lane, thanks. Dave, you had some?
yeah, I was just going to chip in 2 cents there. It's like you can't predict the black swan kind of things, but I tend to look at what if there, especially when there's a few stocks carrying a lot of indices, like we've
Hmm.
had in the past. If there's anything that's going to affect the group that's the current leadership significantly, that's maybe when there might be a little bit of a turn somewhere. Um, for example, these Mag 7s or whatever, if they were all going to become under the fire of federal regulators for like let's say antitrust issues or something like that, the whole group that the leadership something like that might challenge the leadership, then that might be something to watch out for. But I don't particularly see any of that with our current political situation. So
Yeah, yeah, I don't either.
yeah, so I don't know how, can't predict the black swan. So, but
No,
this is a type, just a comment there. This is exactly the type of environment that when something bad happens, it happens like now and nobody's expecting it.
yeah. Well, I wouldn't think it would be until the new year at this point, but
Yeah, I don't either. I'm just saying it's you know, out of the blue, that's when things happen. Can't predict
yeah,
it.
yeah. Well, I mean, I will point this out. I guys showed you guys last week this trailing. We're near records. Like these are previous record trailing S&P
Mhm.
PE, but I found a new one. This is price the book. Near all-time highs back with the 2000, S&P price to book ratio. So, I mean, we're definitely, valuations are up there, but anyway, that can go on for a long time. Okay, let's get into some analysis here. SPX still state one. We hit the all-time high back here, which was a new high from back in this early November. So retreated a little bit above, from that, and then I mean, really, we're not getting much out of these modeling since we're well above, but this is the launch pad. This is ideal. We pop up, retest, and then launch up. So these things can go for a really long time, but above this target three, nothing guaranteed, but staying above this target three, at this point is critical. Just right below 5,900. I've been in here a real long time, and let's go to the chart. So chart wise, let's get the lines. So here's 5,800. Top 62. So we have our 20-day. That's our short-term kind of critical one. To keep grinding higher, staying above that. That's at basically 6,000 right now. Below that, we got our 50-day, which was, which held last time. Previous time dipped below that, when it drops below the 20. So those two are our big levels. That 50 days, 58.91, pretty much right at target three kind of area. So those are two big ones. Bottom range 5,800. So as long as we stay above that 20, we can just keep grinding higher. So that's kind of where we're at on SPX. And then Russell, so there's all-time high by 5 points. Hadn't been a close, above that, but just kind of grinding lower, since that all-time high. A lot of those times, I mean, you look at this, like, we hit 2,300, just went like tanked, and likes to hit these kind of highs and then just like fall off and then rebound. So this has been the same, we hit an all-time high here on the 25th and just been grinding lower. But, just staying above 23.35 target three, and then, 2,300 is bottom of the range. So you can see back here, we really tested that. I don't think we closed below that 2,300 and then, kind of launched off and kind of fading back to it. So 2,300, very important. Every 100 points, is important with the Russell. So, 2,400 is that kind of level right there. But, same story, well above averages on everything in the modeling. And let's pull up some of the lines. 2,300 bottom range. All these things kind of line up nicely with the modeling. 2,500 top. That's your all-time high here, 2,466. So, every, staying above 50 for this one, important. So that's right above that bottom of the range, 2,320. Bottom range 2,300. So, if we can stay above 2,400, closes, I could see us trying to make a run at 2,500. If we get down and try and test 20, the 50-day, that obviously needs to hold. Or, we could get a 200-day test, which is well below at this point. You know, he's had some really big moves up and, you know, kind of retraces almost every time. So, yeah, we'll see if we can, you know, just stay above that 2,400 and kind of grind higher. But it's kind of where we're at. Russell, talk 10-year. It's been helpful for Russell. So 424. Yeah, we're up near 4.5. Bigger picture, longer term. We had 5 here, like 4.75 kind of range, 4.5. So higher highs, you know, since this top at 5, which is definitely not good overall. But you know, we're below 4.5, which I think is, you know, positive. You know, I think we're factoring in a cut in a week. See what rates do overall for that. You know, last time they cut, you know, things jumped up. So, you know, I'm not going to try and predict where this thing's going, but you know, we're in a decent place here. You know, below 4 is very, I think, positive, very positive, and you know, anything below 4.5 is, you know, not hurting, you know, the equities overall, but above that, you know, it starts to get sketchy. Yeah, and we've shown that chart many, many times. So let's take a look. Where's my thing? There it is, Fed. So December next week, they pretty much moved to a cut over 90%, you know, week out. So we're looking at a cut right now for next week. So that'll be down to 4.25. And nothing really for January. You know, it's kind of solidified for no cut for January, maybe a little, you know, possible, you know, a lot of data between now and then. But nothing there. And, you know, March, same, similar, still a cut from between January and March. So between now and March, you know, kind of 2 cuts is kind of where they're looking. You know, balance sheet, there's nothing going on there. So I want to pull it up and showed you the price to book. So I think that's it for market update. I'll open up to any other questions, comments. Anyone? All right. Okay. Other than that, I think let's go through our earnings plan to show this real quick. I think we have 1 or 2 trades left. We got one bearish runner, the 13th. I think that's the last trade that X already pulled. So got 1 trade left for the Q3. So the rest have all been closed out. No change for these top 3 or, you know, the non-mover. So the only 2 active right now are bearish runner. That one's been down. Overall, we got a few still open. These are going to be closing soon. JD Target, you know, based off of time. But overall, this one has been our loser. So, yeah, we'll see if we can get some kind of turnaround, you know, kind of offset by how well bullish runners done. And then Volrise has been doing good. This one will close out today. CN, so it's kind of borderline. You'll see if we get a nice little pop. We got Costco, so that'll close out, you know, before the close tomorrow. And then FedEx just came in. You know, we got till the 19th, and but this one's been up good. So, you know, overall it's been good. Just a couple of you know, bearish runners been the worst. So hopefully we can get a turnaround there, and then, you know, non-movers down a little, but you know, these 2 are both up, and bullish runners and wall rise are up pretty big. So overall it's been pretty good, and you know, we'll get ready for Q4 next week. Any questions, comments on that? All right, well, that's all I had. I'll pass the baton to Mr. Joe.
All right, Josh, thank you.
Yeah.
Let's grab the screen here. And thanks for joining, everybody. Couple things that, and just a few charts to go through, but let me clean up this screen if I can. One thing that kind of caught my eye, and just in terms of prices still seem to be to the upside. We back and fill a little bit. The pie's been steady, but when I look at the home page and look at the indexes, the average moves are one thing. We've exceeded those average moves, but the current moves, and this is before today's up move in a couple of the indexes, that current move is close to the highest point of the current state one runs. It's a little over 8.5% in SPX. Going to be better today with we've maxed out at 9.5 in this current move. So anyway, that it just seems more evidence of a constructive market. As we talked, something can blow up at any time, but those black swans, you just never know. We know that time, we're a long way from all-time highs in terms of current days, but well beyond the averages here. So that was something, we continue to be strong with the current move close to the max percentage move in this current state one and well beyond the average moves. So as I said, I thought, let me back up here a little bit. In terms of the sectors, going way back, when the financials are healthy, the market's healthy is an adage that, I certainly grew up on. And so I thought I'd, pay attention to XLF today. Just part of the reason, you've got the industrials and XLF leading the charge in terms of, current days in state one. So, if I may, how about if I pull up a couple XLF charts here, but before I get into one other group. And, here's XLF longer term, basically the pre-COVID sell-off to current move. And so, what struck me about this, and, you go with the old A, B, C, potential move. If you take the length of A, and I was taking this low last October as the bottom of B. If we're to get a symmetrical A, B, C, that would take us up to about 55 in this thing, with the length of A being 25 points. So anyway, just kind of a big picture, target up around 55 of XLF. But what struck me here, we come out of the COVID lows, and, oftentimes the financials trade at lower multiples, as I think we all know. But, here was the monster low in the market for, many stocks. It was the fall of 22. We get out to the fall of 23, the financials hadn't done a damn thing. That's, when I looked at this chart today, I really hadn't realized that, the financials really did not participate in, leg one of coming out of the bear market that ended in, basically November of 22. And so it was really, this past October low where, a lot of stocks were a heck of a lot higher, that XLF started to pick up. And I think part of that was just because of valuation. So we are at, I think it's 83 days currently in state one. So I did a little homework and went back to the longest periods where XLF has been in state one, just to see, what periods in the market was that? Was it leadership? Did it suggest something stronger in the overall markets? So the longest state one in XLF is 149 days, and it started right out of the financial crisis. Basically we got I think, a 42% run in XLF. So, you know, and then, you know, we just kind of didn't do much after, you know, going with the 1, 2, 1, 2, 1, 2. But so I've just pulled up the charts from when they went into their longest state one runs, and then give us some, you know, a year or two after that, just to see, you know, what it's indicative of. And certainly, you know, we were fighting through the bear market at 22. So this particular longest state one at 149 days, I don't think, you know, was foreshadowing for much. Number two was the 2012-2013 period, you know, close to the same number of days, about 138 days. We had, you know, nice run, obviously coming out of the financial crisis. These things, I'm sure, at that point were crushed. And, you know, basically no real significant pullbacks coming out of the 12 lows. So, you know, that was number two. Number three, we're looking at 2017 and 18, you know, where we had 100 days. And, you know, you get into 2018, you had, you know, back in this period here, you know, you had through Fed raising rates, market sold off really hard in that period. And so, you know, no real foreshadowing there as well. Fourth one was, you know, the far more recent 23 period where, you know, like we were talking about, coming out of kind of a sideways, you know, 22, 23 market for these things. That's where this thing really got some legs, and, you know, we continue to run. So, you know, to me, definitely a sign of strength in the market. You can see this last leg here. You know, this is our current at 83 days. And, yeah, Josh had already pointed out, you know, the various moving averages. But, you know, we've run a long way. Clearly, the multiples have expanded. And I think, you know, this will be one just to keep an eye on for, you know, overall health, to see if, you know, some of the multiple expansion starts to exhaust. You know, as Josh says, earnings are coming soon. It'll start with JP Morgan, and we'll get a sense of things, you know, once again. So let me see, was there, yeah. So I just, you know, going way back, as I said earlier, you know, just the overall strength of the market, often led by, you know, the health of the financials. XLF, you know, just being, you know, a snapshot of a bunch of these different things. You know, Berkshire is, you know, the largest piece at 12%. You get JP Morgan at 10, Visa at around 8, MasterCard, BAC, Goldman Sachs, Wells Fargo. So lots of the stalwarts, and you know, certainly they've had a hell of a run since, you know, October of last year. So just thought, wanted to go through that a little bit. And then, you know, somebody mentioned, I guess Dave maybe mentioned the Mag 7. As it turned out, that was the other group I wanted to go through today. Just, you know, there's, and you know, the backdrop for earnings still seems to be constructive. I mean, you know, we're talking maybe 275, you know, somewhere I keep reading between like 265 and 280 for the S&P 500 next year. So, you know, that seems to be a tailwind for us. And of course, you know, the multiple expansion, I would assume, is the risk in the market. You know, we're banging up, you know, into the, what, 21, 22, 23 range for, you know, a lot of these multiples. So, you know, if we're to get a pullback, it's, you know, I think that'll be not the cause, but, you know, it'll be a backdrop as to why we got, you know, a pullback. But, you know, I don't see it at this point. And so the other stocks that I pulled up were, in fact, the Mag 7. Just to see, okay, you know, market is doing well, but kind of, you know, been a little bit of sideways action for a period here. How the Mag 7 doing? Well, all 7 are in state ones. And what I found, somewhat interesting is that a number of them have only been in state one for, a week or so. I think 4 out of the 7, 3 out of the 7 have only been in state one for a while. 3, Nvidia and Amazon, well beyond that, but, may suggest, again, some underlying strength in where the money's flowing into this market. So there's Microsoft, 7 days in, average of 40 days. Another thing that was interesting, with the exception of Tesla, the average period of time for the Mag 7 in state one is in the 40 to 45 day range. As I say, 3 of them are just 7 days in at this point. So there's Microsoft. Take a look at this from a little longer term perspective. Still hasn't gotten to the July highs. Okay. Next is Apple, or no, excuse me, I guess Google. Let me just make sure I didn't miss Apple. Nope. There is Google, and in the news yesterday, so a bit of a gap there. And again, still seeing if it can get up through, and I guess that's the thing to watch for in a few of these, to see whether a couple of these can get through the July highs. Google not yet. And what do we got? Just again, 7 days, and these things still have, plenty of room to run in terms of their average move. Microsoft under 3% with an average move of 10. So, if the averages are to play out, I would suggest we've got some room. Somebody mentioned earlier, maybe Josh, about, we got positive seasonality here for a few more weeks at least. So that's Google. Apple is next, and Apple, I was surprised actually the other day when I looked up Apple that it was in, really the mid 240s. And I knew it had come off the 165 lows going back a number of months. I didn't realize it was into the 240s. And here's one still with a long way to go in terms of average days. This is at 12. And let me pull up longer term than Apple. There's a 5-year chart. So this thing, continues to build some momentum. Be interesting to see whether it can get up into target 3, close to 280. Certainly, time is on its side from an average move in terms of state one. Last 4, we got Nvidia. And, we all know, how this thing is done, kind of chopping around through, the target levels here. Nothing negative, really. With the exception of, this thing has run its course in terms of number of days, but, still, and I think we've talked in the past, it's really not an NVIDIA market anymore. I think this last earnings release for NVIDIA was darn important for the markets. And, NVIDIA, certainly delivered. And the fact that this thing's run so far and you got a multiple where it is, it's not shocking to think that it just backs and fills at this point, for some period of time. Couple more. There's Amazon, which has been on a tear, and look at that, target 3, right up to it, and you get a couple red candles, and quite a tear. This is one that maybe you would expect to back and fill. Given that we're beyond our average days, we've reached current move average exceeded a little bit, so been a heck of a stock, as we know, and coming out of those August lows. Just, ferocious to the upside. But state one as well. Meta is the third one where, just into state one for a week now. Long way to go, both in terms of average move and, versus the current move. Longer term here, there's, this thing just building. Let me go out further, I'm not sure. Yeah. Just off to the races. And last one would be Tesla. That's one, yeah. Up here, target 3, basically at average days. Current move has been a rocket shot, so it'll be interesting to see whether it just kind of back and fills here at the 400 level with target 3 resistance, or whether it continues, to move to the upside. But a lot of momentum in the Mag 7 for sure, and the market just continues really surprises to the upside. We back and fill a little bit. And Josh very thoroughly went through, the Russells. I just, thought with the momentum in the market, I'd pull that up too. And, those moving averages have been, for the most part, pretty good support. And as Josh pointed out, we're trying to hold that today. It's up a little bit, and we'll see how that goes over the next week. We do have a lot of numbers over the next week. PPI tomorrow, I think not much on Friday, but the Monday, Tuesday, Wednesday, and Thursday of next week, all kinds of numbers. So, we'll see whether we get any impetus. We got the Fed meeting, as Josh pointed out. Another thing, just didn't do any deep analysis on the VIX here, which is, kind of just going, slightly down. But, the fact that it was in state 8 is what caught my eye. It's been here for 4 days. And what caught my eye was the fact that it's state 8, only 4 days. Average move in state 8 is 19 days, which is, I was kind of thinking, well, if VIX isn't going to, do much, and certainly it's down on a level where it could move a little bit, but, you're talking more like a 4-week average move. And if VIX is, just going to lay around at these low levels, over the next 3 to 4 weeks, that's another potential tailwind for the markets. And, again, just getting back to the idea of no real extremes unless, broadly you speak to the multiple expansion. And, whether that's an actual extreme, is debatable. I guess, the markets, we're going to get another chance in the next couple of weeks to see whether, earnings are going to continue to support this market as they have now for, a year plus. This is the AAII survey that comes out every Thursday. You've had, some movement on the bullish side over the last few weeks, but certainly not an extreme. I did do some homework today just to see how often this thing gets above 50. It's not that common. So I am going to keep an eye on, this thing getting above 50. It did so in the March period of this year, as well as the July period. But that, was a little bit interesting. March is when, we basically had a correction in the market from mid-March to April 19th. And, this index get up around 52 on the bull side in March. And then also in July, right when, we had the swap with the Russell versus the NASDAQ, we had that rotation. This thing was up around 53 on the bull side in mid-July. And, so anyway, just this thing starts to peak above 50, I think it might be worth keeping an eye on. Not necessarily that it's an extreme, because I can go back. The one thing I noticed, because this survey goes back to 1987, and there were far more 50, numbers north of 50 in the 2013, 14 range, even a little bit in 2018 versus currently. So anyway, just, one of those kind of broad and exact indicators that we'll keep an eye on. And then just lastly, and I reference this from time to time, that S&P oscillator, which, +4 is overbought, -4 is supposed to be oversold. Some people now talk about +5 and -5. But that oscillator, as of last night's close, was -0.9. And, just to me, another suggestion or piece of evidence that, there really aren't extremes in terms of the market being overbought at this point. So, they were the couple things I wanted to offer today. Happy to take any comments or questions.
Say, Joe, this is Dave. I got a comment on, you were talking about the mini, uh, let's say, I don't know, rotation out of bigs into the Russell. It was back, I think, in July-ish. I
Yes.
think that was when there was a thought that there might be a rate cut cycle of numerous cuts in a row that is now non-existent. And that was the reason for there was a lot of talk back at that time about, well, the Russell might be the place to look for stocks. But now that there's not, now that issue is not as significant, that the Fed might not cut rates so much anymore, there's like, well, let's stick with the bigs. And the other point about that was after Lena Khan was the FTC, she was really hammering on the bigs with the antitrust issues, Google in particular. If you look at Google, I think it's up like 10 points today, like 5%, because Trump is going to replace her with Ferguson, who's a Republican, let dial back regulation on all the bigs. So I think that's why the bigs are more in favor nowadays, is that risk off the table of antitrust has just come off the table. So I think that's why
Thanks, Dave. I think that's a great point. And is Google up another 10 today?
It was earlier. Let's see.
Okay. Yeah.
It's up about
Yeah,
5% off now. It's just a big green candle. And that was the news. That was the news driving that event, was that the antitrust witch is gone, kind of thing. Although, for consumers, I don't know whether it was probably not a good thing that she's out of office now, but for all the investors in the bigs, it's a good thing.
You're right. It's a great point. Thank you. Anybody else? All right, Josh.
All right, thanks, Joe, and thank you, everyone. We'll reconvene next week, and we'll have the new earnings plan and Fed meeting. So thank you all for tuning in. We'll do it again next week.
Thanks, Josh.
Thanks, Josh.
Thank you.